Hi Per, so it's been a record year for new issuance. It could well be, judging by the first half so far. If that trend continues, it will be a pretty strong amount of issuance. But I'm concerned about the quality. If you look at January to June, there were 60 new issues, but only 13 of them by the end of June were trading above reoffer. Have you participated in many, and are you concerned about the quality of some of these issuers getting over the line?
I mean, first of all, I think we have already reached the new issue record volume, or matched it basically, already in August. So we clearly will exceed by far what we have seen record years in the past. And clearly what you mentioned is correct, and it's also a concern of us. A lot of the new issue, the quality has been either the quality wasn't appropriate, or the pricing was just too tight, too expensive. And therefore I think it was very important, as you mentioned already, to be very selective, and we have been very selective also in our new issue decision, and probably participated only in 50% of those, because the other 50% either they came too tight, or we didn't like the fundamentals, or the structures were terrible. And obviously new issue game is always a game of demand and supply. And you mentioned the big supply coming to the market from new issues. However, the demand was even larger. And particularly during spring, we had periods where investors were stuck with a lot of liquidity, and they looked and bought basically whatever they got. And they bought all the new issues, and obviously the issuers, they used the situation, exploited the situation, and weakened the structures and tightened prices even more. And obviously when the market corrects, and that's what happened in the summer period, obviously those new issues then start to sell off and start to trade below reoffer prices that you have seen. And so it's also a typical phenomenon in the European high-yield market that, I mean, you have sometimes a lot of new issues and sometimes no new issues. When you have a lot of new issues, often investors don't really look on the individual companies enough anymore, on the fundamentals, because they're basically buying everything. And then when the market trades down, they don't feel comfortable with the position because they don't know the fundamentals well enough, and they sell it off. And that's basically what happened during the summer period, and that's the reason why a lot of those new issues underperformed.
And it's very interesting if we look at some of these issues, how they performed in secondary. I could flag the names like Edcon, Taco, Avanza, which were over 10 points below reoffer at one point in June. Were you inclined to look again at these new issues at better pricing levels and pick them up in secondary?
Sure, I mean we did, and we're following normally up those bonds. As I said, we only invested in some of them. A lot of them we didn't invest. Some of them you mentioned we didn't invest, fortunately, but we are still tracking them. And obviously there is no bad investment, or there's no bad investment. If the price is appropriate, then basically every bond can be a good investment. And that's, you saw sometimes the new issues, they traded off way too much because of the technical sell-off. And once a bond gets the stigma of being a poor dog and being wrongly priced, they can basically trade down too much. And for instance, in Avanza or some of the other names, we have invested during the summer period when they became more attractive again, and where they offered, in our opinion, value again.
Definitely. And in terms of the documentation, have you noticed it get considerably weaker in new issuance from January to year to date, basically?
That was clearly a trend. As I said, documentation is again a function of demand and supply. And whenever you have a big demand for bonds, then issuers and the sponsors, particularly sponsor-led deals, they're trying to basically weaken the documentation in order to give them more flexibility. And you have seen it in different issues. You have seen, for instance, restricted payment tests. You have more and more exceptions and more carve-outs, which offers investors, which offers the issuers to be more flexible. The change of control was one other big feature. In the past was relatively standard documentation. And all of a sudden you have the features of portable change of controls, where basically the company could get sold and to another buyer. And only if the leverage statistics would deteriorate due to this transaction, the change of control would be triggered. So it doesn't protect the buyer, it doesn't protect the investor if he doesn't like the new sponsor or the new owner. And obviously the owner can be an important part of the story for that. So clearly you saw a weakening of the documentation. You saw a little bit of relief of it during the summer period after the correction, that all of a sudden some of the deals which still came to the market, and where all of a sudden investors had more leverage again due to the weaker demand, all of a sudden you saw the documentation improved again. So it's very important. I mean, often those bonds which come at a period where the market is weaker are the best longer term, because they offer better documentation, offer often better pricing.
And in terms of new issue premiums, have they compensated you enough for this weak documentation? Portability, for example, have you got enough basis points in extra premium for deals, or not enough, basically?
It's probably fair to say that during the spring period, when this demand-supply mismatch happened, which I mentioned earlier, that obviously the premium was not enough. And basically you got periods of time where basically the investors put in all kind of features and weakening the structure, and I think bondholders didn't get any compensation at all. The same with call structures, that all of a sudden callability weakened again and a lot of call features entered this. For instance, like that a company can issue 10% of a bond every year at 103, or that all of a sudden when a company does an equity clawback, that equity rights issue, that they can all of a sudden call 40% of the bonds instead of 35%, which has been the standard in the past. And it's fair to say that a lot of investors didn't care during that period, and that the pricing didn't reflect this weakening. And as I said, it's a situation of demand-supply. From our side, I mean, we're trying to be more disciplined and really trying to make sure that we get paid for it. And that's the reason we didn't invest in probably 50% of the niches which came during that period.
Definitely. And how do you see new issuance volumes for the remainder of the year? Will they remain strong, or do you see any factors which could cause a deterioration in issuance?
I mean, obviously, if the market stays stable, we would expect new issue activities to stay strong. And what I'm hearing from the lead managers right now, they're saying the pipeline is still full. And basically next week or end of this week and next week should pick up again. I mean, obviously, we had a traditional summer vacation period in August, which slowed new issue activity down. But we would expect, if the market doesn't all of a sudden fall apart, to expect more new issues, and which is positive longer term, because obviously the European market is growing through that. And you see now a little bit the trend which you saw in the past in the US, that high yield bonds and securities are replacing the traditional bank loan in Europe, and that the market in general becomes much more larger and much more straightforward and much more common also for the issuers. In the past, you had probably issuers often thought it would be a stigma to issue a high yield bond, saying, oh, credit quality isn't that great. But now I think it has become much more common, and companies don't worry anymore that their reputation could suffer by issuing a high yield bond.
Thanks so much, Per.
It was a pleasure.